Vivek, I know we're going to get into some controversy here because you think capital gains should be higher.
Smart chartered accountants should not be doing low-end work like filing taxes.
You're saying that the capital gains tax shouldn't just be 12.5, it should actually be the slab rate that applies.
It should be the slab rate. So if I am in the 10% tax bracket, I should pay 10% tax.
Wow.
If I am in the 20% tax bracket, I should pay 20% tax. That is the way it should. That is the only way to sort of simplify the income tax system. More than 1.1 crore flats in India have been bought for investment purposes and are locked.
You're not unhappy with the withdrawal of indexation?
I'm very happy. These days on social media, try to project themselves as being middle class. A middle class guy does not buy a house and keep it locked.
If you have any hate mail, you can direct it at Vivek's handles.
Sure.
Hello and welcome to Moneynomics with Mint. This is Neil Borate, Mint's personal finance editor. And joining me today is not the one and only Vivek Kaul, author and columnist. And today we are going to talk about budget, which just happened a few weeks ago, and whether middle class matters, hashtag or not. So Vivek, what is your take on the budget? Good, bad, ugly?
I mean, see, what has happened over the years is that as the importance, and I don't know if I should be saying this, as the importance of the budget for the media, the influencers and everyone has gone up, the budget's importance in the context of the overall economy has actually gone down. Because it's simple, the policy making happens through the year. It shouldn't just happen on the day the finance minister sort of presents the budget. So, the obsession with this obsession with the budget is good for people like me because, we make money out of it. But beyond that, other than a few tax proposals which impact companies, which impact individuals, as a nation, we tend to give too much importance to the union government's budget, which we shouldn't. And the funny thing is that nobody really, even, all the state governments present their own budgets. And there's barely any talk about it, at least in the English language media that I follow. I mean, maybe in the Indian languages, there is some talk about it. But in the English language media, there is barely any talk about it. So that is my view on the budget.
Right. So a lot of people in the urban middle class have been very upset by the removal of indexation. So in fact, a couple of things. First, the hike in long-term capital gains tax from 10 to 12.5%. Then the removal of indexation for real estate, which was partially rolled back and brought back in. And then the total removal of real indexation on grandfathered debt funds that were bought before April 23. So if we could take them one by one, and Vivek, I know we're going to get into some controversy here because you think capital gains should be higher.
So I think, I have a very simple view here. Smart chartered accountants should not be doing low-end work like filing taxes. If you have to make the tax system simple, where an average guy who's a simple graduate can file his own tax returns, all income has to be taxed at the same rate. So if my income falls in the 10% bracket, irrespective of whether the income is from capital gains on real estate or capital gains on mutual funds or interest income on FDs or my salaried income or my income as a freelance worker, it has to be taxed at the marginal rate, 10%, 20%, whatever, 30%. Because that is the only way a tax system can become simple.
So just so our viewers understand, you're saying that the capital gains tax shouldn't just be 12.5, it should actually be the slab rate that applies.
It should be the slab rate. So if I am in the 10% tax bracket, I should pay 10% tax.
Wow.
If I am in the 20% tax bracket, I should pay 20% tax. That is the way it should. That is the only way to sort of simplify the income tax system. So otherwise there'll always be some exemption, some. Now, look at the entire, how, the current system or the system that has prevailed over the years. I mean, the current system is still simpler. But, at a point of time, different kind of investments in gold were taxed in different ways. It's quite crazy, some of the stuff that...
Yeah. But Vivek, I'll give you the counter to that,
Sure.
which is, let's say you take equity capital gains. Now that is already taxed income. The company has already paid tax on it. So why should I as the investor again have to pay tax on it?
I mean, see, we can continue with that theoretical logic, or we can look at the fact that if the aim is to sort of have a simple tax system where our CAs are, employed in doing things which essentially benefit the nation and not in such low-end work. I mean, I think all income should be taxed at the same rate.
Okay. Now, apart from the issues with raising the capital gains tax, there was also the issue of going back on promises or retrospective taxation. So the two areas in which this happened, one is real estate. Now, real estate earlier was taxed at 20% with indexation after a 2-year holding period. And below that was SLAB rate. And then they took away indexation, they brought in 12.5. So the math roughly was that if your house price was growing faster than 10%, then you paid lesser tax in the new system. If it was growing slower, then you were paying more tax. And we looked at RBI data, which showed that at least since 2010, for most cities, house prices have grown less than 10% CAGR. So the tax burden actually went up. And with all the hue and cry, the government finally relented and brought in that option of indexation if you've bought your property before the budget date, 23rd of July.
Only for resident Indians.
Only for resident Indians and HUF, so NRIs still have to deal with the higher tax. So you do agree that they should have, even to begin with, they should have made sure that anything you bought before the budget should have been protected, grandfathered.
I mean, see, retrospective taxation does not make sense. I mean, I agree with that. But at the same time, you also have to look at the broader issue, right? What is the broader issue? The broader issue is that over the years, India's income tax laws have incentivized investing in real estate, or rather speculating in real estate. So there used to be, and you would know this, that there used to be this funny thing where the moment you took on a second, third, fourth, or nth home loan, the entire interest that you paid on that home loan could be deducted against taxable income as long as you were taking a notional rent into account, right? So if, the home loan interest rates in India have been higher than 10% also for very long periods of time, whereas rental yields, which is essentially the price of the house, the rent on the house divided by its market price, has been around 1.5, 2%. So there were people who were buying homes and practically not paying any tax. So
because they were making a loss on the house.
On the house, right? So
which they were setting off against their other income.
Right. So basically, not other income. Normal taxable, whatever your taxable income is, you could, if you are in a self-occupied property, the interest on that on the home loan that you have taken to fund that property, you can sort of deduct it from your taxable income up to 2 lakh rupees. There is a limit now, right?
That they brought in later. Earlier, as you were saying, there was no such limit. So people...
No, so the limit earlier was on the self-occupied house, and there was no limit on the non-self-occupied or whatever, invested houses. Now the overall limit is 2 lakh. You have 20 home loans, that is your problem, which is... So people would this essentially incentivized people to, buy homes and keep them locked, right? So I think recently one of the real estate lobbies, the president, a gentleman called G. Haribabu, if I remember his name correctly, said that more than 1.1 crore flats in India have been bought for investment purposes and are locked. Now, India is a young country. The median age of this country is less than 30. And all the youngsters who are growing up, they have an aspiration to one day own a house of their own. Now, if 1.14 crore, if that was the number, flats have been bought and locked, what you have essentially done is you have turned what is a physical asset into a financial one. Okay.
But so Vivek, there was another reason for that as well, which is all of these tenancy laws. And No,
I agree. So I'm not saying that, the incentivization through the income tax laws is the only reason.
Right.
But, you can only set right what you can set right. So, like, one of the things they did was to essentially limit the amount of the total amount that you can deduct against taxable income of home loan interest up to 2 lakh, right? So they did that. So I think that was a great move. Now, indexation, which was a uniquely Indian jugaad. I mean, at least I haven't heard of it being there in any other part of the world, and I would love to be corrected if I'm wrong. Was another factor. You're essentially incentivizing people to invest in real estate and keep it locked. Now, this is not the only reason. I mean, the other reason is obviously the amount of black money that prevails in real estate. So when, let's say, you sell a house and you get black money, then that black money goes into buying more real estate. So there are multiple reasons. This is a complex problem. And the government can only do, what it can do. The crackdown on black money cannot, you can't like get up one fine day and say that, okay, let's all the black money in the country come to
the
an
only
end.
caveat I wanted to add is that on the homes being empty, so that is a result of partially also of the tenancy laws where people
100%.
could not kick out their
100%. I agree with that. But what I'm trying to say is that why incentivize the buying in the first place? Okay. So there's no point in buying a house and keeping it locked, right? It also, there is also an environmental impact which people don't understand, right? A lot of what goes into the building of the house, of any house, any flat, plastic, steel, bricks, these things are when these things are produced, greenhouse gases are emitted. Now, if you walk around Mumbai anywhere, there is so much these days, there's so much construction dust, right?
Yeah.
So there are second order effects also which one has to think about, right? If we want to sort of leave a better world for at least I don't have any children, you also don't have any children, but if people want to leave a better world for their children and grandchildren, this is not something that they should be doing.
Okay. So, in short, you're not unhappy with the withdrawal of indexation.
100%. I'm very happy, in fact.
And in fact, you would raise the capital gains tax to the slab rate.
That is not going to happen. I mean, this is just something that I believe in.
Yeah. The other area where grandfathering was not respected, where retrospective taxation happened, is with debt mutual funds. And it is worse there because, at least with real estate, you can argue that some houses would grow faster than 10%. You would not practically find a debt fund growing faster than 10%. And especially in a case like a Bharat Bond ETF, which was sold with the tagline of the government, 2019-2021, you hit 24 and suddenly the same government hikes tax on it.
So it's not fair. I mean, I agree. But you also need to take into account the fact that all these investors have benefited from indexation so much over the years. So, I can tell you about my personal experience. There used to be something known as double indexation, wherein what would happen is that a debt mutual fund would be launched a few days before 31st March, and then it would mature not in the next financial year, but in the financial year after that, in the first
week of April.
Right?
Yeah.
So even though you were investing only for like around 370, 380 days, you were getting indexation benefits for 2 years.
Yes.
And practically, I would tell you, one would make 10-11% return and not pay any tax because indexation would ensure that there would be a loss. So these are investors who have benefited majorly over the years. Yes, the government is wrong in doing what it has done, but you also need to take into account the fact that a lot of money has been made in the process. Whereas a poor old, anyone who did not understand debt mutual funds and who did not know about it would be doing fixed deposits and paying tax at the marginal rate. So that is also another way to look at it. See, I think what happens is, people who are in a position to make noise are the ones who make noise, right? And a lot of these people these days on social media try to project themselves as being middle class. A middle class guy does not buy a house and keep it locked. So they are not middle class by any stretch of imagination. These are India's rich. Now, obviously, in their heads, there are richer people out there. So they think they are middle class. So middle class as a term does not really have any definition, right? So anyone thinks that, there are days I also think I am middle class. But I am actually, and even you are, much better off than most people in this country. So we are clearly not middle class. So, And they're not even, so a lot of these guys then they say that they're upper middle class. There's nothing like, they're rich.
Yeah. Okay. So apart from the capital gains tax issues, what else did you find good or bad about the budget? Anything on the internship scheme or the first salary being paid by the government?
I mean, see, these are good moves. But ultimately, I think India's basic problem, which has not been addressed, is essentially consumer demand, private consumer demand. So if you look at the GDP data for 2023-24, the GDP grew by around 8%, the overall GDP, whereas private consumption, which typically forms around 55 to 60% of India's economy, grew by just 4%. Okay. Now, this 4% growth, if we leave out 2020-21 where consumption contracted, is the slowest since 2002-2003. So that is where the real problem is. So unless, see, it's like a chicken and egg story, right? So unless consumption picks up, investment is not going to happen. And some economists might even argue that unless investment picks up, consumption is not going to pick up. But in the short run, I think it's the government.
But Vivek, how then are we growing at 8%? Like, how is this magic?
Because, see, that is, there are a lot of reasons behind it. It's also in the way the GDP is calculated. Let's not go there. Okay. That's another show for another day, because then I can keep talking about it for half an hour. So.
All right, fair enough. So on the budget, any other points that you'd like to highlight?
I think this move to remove indexation it's a great thing. Now, a lot of people have, there is obviously a sort of a movement started on the social media, and a lot of people essentially asked the government to get indexation back, and they offered a lot of arguments in favor of indexation. So I think, one argument that was made, and which I found quite funny, was that real estate creates jobs. Okay. I mean, even digging holes and filling them up creates jobs. But is that the way that we should create jobs? Because at the end of the day, a physical asset that is being created needs to have some end use. So that is a very important point. The other argument which I found funny was that now the amount of black money in the system will go up, right? Now, see, why is there black money in real estate? Black money exists in real estate because the circle rate at which you have to pay stamp duties is lower than the market price, right? So indexation has got really no direct link with this. So this was just an attempt to essentially confuse, the common guy who's looking up to these guys to understand what the issue really is. So I think this was, if there was one standout move for me, it was the fact that the government sort of took this on and went ahead with it.
And to be fair, the exemptions under section 54 and 54F, they very much remain in place.
In fact, if you want to sell a house and buy a new one, you don't have to pay capital gains tax, right? So and then you have interest exemptions up to 2 lakh. Your principal can be deducted under Section 80C. So it's not like the government has taken away all these things. So for someone who really wants to buy a house, these things are there.
Yeah. And of course, they've sweetened the new tax regime as well. Are you, by the way, in the old or the new this year?
So this year, basically, my CA put me onto the new tax regime. Yeah.
Same here. High five.
Up until now, I was on the old tax regime. So.
All right, Vivek. So before we finish, any final points?
Yeah, I wanted to make one final point, and I think for this I need to thank Harsh Rungta, who is a SEBI-registered investment advisor, and he made something that he referred to in a column that he wrote for the Business Standard newspaper. So he essentially provided a link which showed me the different rates at which capital gains are taxed all over the world. See, one thing that we have constantly been told in India by people in the business of managing other people's money, or OPM as I like to call it, is that capital gains are taxed at lower rates all across the world. Now, this is true, but if anyone goes through that link that Mr. Rungta provided, what they would realize is that 12.5% the rate of taxation is actually quite low. Also, in many countries, capital gains is actually taxed at the normal personal income tax rate. So this story that we have been sold about how capital gains are taxed at lower rates in comparison to salaried income, interest income, etc., all across the world, is actually not really true. It's a story that we have been sold because obviously no one really, till Mr. Rungta decided to look at data, nobody really bothered to look at data, and we just bought that story.
There was one, I think, finance secretary or someone who had said that you don't have to take any efforts to earn capital gains, which got into a lot of...
Subhash Chandra Garg did say that, and while that may... we can argue about it whether it's true or not, but I think it's only fair that the different kinds of income be taxed in the same way, because it's not the government's job to incentivize one kind of income over
the
another.
other. All right.
I don't buy that. So.
All right, folks. Thank you so much for tuning in. If you have any hate mail, you can direct it at Vivek's handles.
Sure.
But thank you for listening to us.
Thank you.